Good afternoon. Welcome back to the Daily Squeeze. Brian Farr here, VP of Stock Analytics with the Stock Dads. Today is Thursday, February the 1st, first of the month. Man, it was a pretty interesting day. We had some pretty awesome wins throughout the day with IWM puts. We took some SPX credit spreads that we converted into a long position and just absolutely nailed that. Yeah, overall pretty good day in general, and there is some wild action going on in the after hours with earnings from Amazon, Meta, and Apple. Today we still had some interesting economic data with the jobless claims, Chicago PMI, that all that came out just fine. And we still continue to see a strong labor market. So there's that going in. Regional banks, are we still seeing issues there? Yeah, some volatility definitely going on in that neck of the woods. But all right, let's go ahead and just get into things here. This is the Daily Squeeze. All right, let's go ahead and just kind of jump into things. Yeah, pretty good close altogether. IWM leads the way up 1.3% on the close. SPY up about 1.3%. The NASDAQ closing up 1.18%, and the Dow up about 1% on the day. Even yields getting clapped back down today, down 2.6%, even with the Fed coming in and Powell just hammering in the fact that they are not anticipating or discussing any sort of rate cut for March. And we all know and we all witnessed that reaction yesterday from that news. So yeah, this has been a pretty interesting ride since yesterday. We had that big pullback, and even so today, you know, we had this pretty interesting market, a lot of choppiness to get things going. It looked like we were going to drop even lower, only then to catch a bid around the 11 o'clock hour. And then finally, we just slowly had this grind up within the SPY, and especially in the NASDAQ there, catching a nice little bid, as we can see if we can pull that chart up. Yeah, there we go. Yeah, even with the SPX, you know, I touched base with this earlier, but even on the SPX, I took a call credit spread at about the 48.80 mark here, and I was like, well, looks like we're going to puke. It looks like we're going to get this gap fill to the downside. So I went ahead and took a call credit spread. And then once we got back up here and we started to break out, I was like, this isn't looking too good. And plus we were like, we're starting to form a bull flag here. So I went ahead and just converted that. I bought back my short position and rode to the long side with that, and that paid out extremely well. We hit this nice bump all the way up to about 48.95 and ultimately up to 4900. So we converted that losing position into a nice win altogether. We did start out the day with some puts on the IWM, and I've kind of noticed this, that past few sessions or so, the IWM really enjoys to do these little gap up moves, and then they try to lead the way and then they just fade on down. So that's what I did. We saw some overall weakness here on the IWM. We took IWM puts all the way down to this 191 spot here, and that was a pretty good trade overall. We also took Microsoft calls. Yeah, those IWMs we took from 165 all the way up to $2, so pretty good stuff there. Microsoft, we had a nice 405 call that we took from $3.45 all the way up to $4.45. That was a nice little $100 win there. Nvidia was also a fantastic win. Well, Nvidia was kind of interesting. We went long, we got stopped out. Once we came back into the range, I was like, yep, time to go again. The signals look very good based on my indicators and the momentum that was shifting at that time. So we initially got stopped out, we got back in, and that time, the second time we hit pretty darn good there. I did take off my swing position on Shopify. So just to pull that up, yeah, we had a swing position on Shop. I got stopped out today, and rightfully so, because the rest of the day just kind of pewed on down. But as you can see, we lost the 21 EMA here, and we even came all the way down to the 50-day simple moving average. This little breakout above 83.20 definitely confirms to be a false breakout for the time being. But if we set back up and move back towards these levels and towards this zone, then sure, maybe we can push back in and try again. But we need to see things stabilize, see if they hold, and get back up and push through this resistance, because right now the bears have just slaughtered this back down to the downside. So we'll see too, and if there's any kind of positive reaction off the Amazon earnings, of course. The main story, one of the main stories today, is definitely the KRE and the regional banks. Yeah, and it's pretty interesting too that despite Powell and all that, the IWM has recovered quite a good bit. The IWM is being pretty resilient right here at the daily 50 simple moving average. It doesn't really want to break down. SMCI has been your big leader here within the IWM, and SMCI is just on an absolutely rip-roaring tear, almost hitting $600 per share. But the fact that the regional banks are having some troubles yet again, thank you to NYCB, New York Community Bank Corp has been experiencing a lot of volatility. It released some bad guidance. It cut its dividend. It dropped 38% on Wednesday. It had some follow through today. Even Japan's Azora Bank announced some possible net loss issues due to U.S. office loans, which does reflect some global concerns within the banking sector. And just in general, regional banks, they are more exposed to office spaces, and the overall tightening effect by the Fed will mean that they're not going to be lending out more freely, especially for small businesses and all that. And it kind of just tightens up the spigot a little bit, so that water, that money flow isn't free flowing. It's a little bit more tight. It's not as free flowing, like I said. So that's pretty much it in a nutshell. It also has been hit with a bunch of downgrades, and overall there are some concerns still out there for regional banks, especially as the Fed continues this tightening policy cycle. So we definitely need to continue to pay attention to it, and there's some warning signs out there. But for the most part, it's not so pretty out there in some areas, but big tech is just absolutely going crazy. Another big funny one today is Peloton. This thing used to be $170 a share. It's down to $4 off of its earnings. It warns it will miss its full year cash flow. And man, just a very disappointing name. I mean, imagine buying at 171. Ouch. Have a plan, trade the plan. But tomorrow we get the non-farm payrolls and the unemployment rate. So the market isn't quite out of the woods just yet. There's been some misses on some of the jobs report already this week. But let's go ahead and kind of look at some of the setups that I am paying attention to. RCL released their earnings. They released, it was a 7th consecutive beat here, and even raised their guidance. So RCL continues to be resilient. You did have an initial pop into new highs here, 52-week highs. Slowed down, but has recovered and stabilized very well. I want to keep a close eye on RCL if she wants to continue even further. This was one of the best performers last year in 2023. It was up about 162% on the year last year. So RCL is a very strong name to pay attention to, and I am looking at a potential swing here. My favorite, everybody knows, this is just kind of a joke, but it is a wonderful stock that I've owned for a while now. Pays a good dividend and all that kind of good stuff. Is Dick's Sporting Goods. You are hanging out at lifetime highs. You've just been kind of fighting with this 152, 155 zone, and we'll see if this can break out. Definitely going to be paying attention to that. And Johnson & Johnson looks a little weak. If it starts to lose this daily 50 simple moving average, then it looks like a pretty good short. But it did do a pretty good job at recovering altogether. AbbVie, I love this setup. I love how strong it has been lately, but it has earnings in just, tomorrow before the bell. So there's that. So I wasn't able to get into that. I am still holding some MPC. I did sell some for the partial win, but I'm still pretty good on it. Had a nice close, still looking for a move all the way up to 172 and 175, even all the way up to 180. So I am still accounting for that. As long as it holds above 160, this thing looks pretty darn prime. All right, so there's our setups. That's our swing. Oh yeah, I could mention that I do like I'll give you one more. I try to keep these kind of light, but I don't want to, because I don't want to give out too much info. But Adobe looks fantastic. I am looking for a push above 633 to 635. If we break above this zone, that's going to be a nice breakout towards 671. I'll have to check to make sure it's not breaking out during the after hours with everything running. But yeah, let's get into it. Let's just jump into Meta just out the gate, because Meta beat on every single line item. Monthly users, daily users. They're issuing a 50-cent dividend. I mean, this thing, Meta, just I'm impressed. I'm absolutely impressed. I'm blown out of the water. They beat on every single aspect. They even raised their guidance a little bit. They even increased their buyback program. And yeah, Zuckerberg was like, you know what, we're doing a dividend too. So props up to Meta and to Zuckerberg. I'm just beyond like impressed, with Meta and the way things are progressing here with Meta. Yeah, absolutely crazy. Very bullish, crazy beats, and everything has just gone right for Meta. All right, let's go over to Amazon now. Amazon also, they're the ones that started the party first in the after hours. EPS beat, revenue beat. Their AWS, they did get a little bit in. It was in line there for the AWS for their cloud services. And good growth still, up 13% on the growth, but it has slowed down, and maybe they're, Microsoft might be taking some away from that. But all in all, pretty good stuff here with Amazon. They even have a slight increase with their sales. It's kind of in line, nothing too crazy, but all in all, pretty good report here for Amazon. But if you compare that to Meta absolutely blew everybody out of the water. And then we get to Apple, who has had a negative reaction so far on the market, even though they did post a double beat on their earnings per share and on their revenues. Their iPhone sales were good, and that's probably in part because of the holiday. So there is that, but they missed on their Mac sales. They missed on their iPad sales. They missed on their overall China sales. And they even missed on their services sales. So there are some, questionable things here from Apple. They're still missing on several line items that a lot of people were kind of paying attention to. So that's why they're not getting the happy, happy, joy dance. You're welcome for that today. So yeah, we'll see what happens during the conference call, of course, and see where things go. The Vision Pro sales will be in the next quarter's report most likely, and we'll get some more data from that and see how well. But yeah, Apple sales kind of across the board. So we'll see if they can pick things up. Maybe the high price of iPhones well, they did all right on the iPhone sales. We'll have to see what the next quarter, how this quarter goes for Q1. But anyway, that's all from me. I do believe we do have some economic data in the morning, so you want to pay attention to that. That could be, that will be a market mover and create some volatility overall. So we're not quite out of the woods just yet. So we get the non-farm payrolls, and there are some earnings In the pre-market, nothing big. You got, well, unless you're energy, you got ZOM, you got Chevron, you got AbbVie tomorrow, Cigna, Regeneron, Charter Communications, SIBO, yeah, the options people, all that good stuff. So you got some interesting ones there in the pre-market. So we'll see how that goes. All in all, tomorrow's Friday. Let's finish the week strong. It's been a great week in general. But yeah, have a good one. I'll see you guys later on. Bye, guys.